If you had put just $10,000 into NVIDIA 4 years ago, that position would be worth over $150,000 today. $10,000 into Palantir 3 years ago would now be worth over $180,000. The kind of returns that genuinely change someone's financial life. And here is the part most people miss when they look at those numbers. The investors who captured those returns did not get lucky. They identified the right company in the right market at the right time before the rest of the world figured it out. That window does not stay open forever. But right now, today, that window is wide open again. And it is sitting across 5 specific stocks that almost nobody outside of serious investors are paying close enough attention to. Today I am going to walk you through each one of them, break down exactly why they matter, and show you the technology trends driving real value in this market that most retail investors are still missing. Stay with me. This is the kind of video you are going to want to come back to. A quick note before we get into it. Nothing in this video is financial advice. I am not your financial advisor. I am an investor sharing my own research and reasoning. Do your own due diligence, understand your own risk tolerance, and make the decisions that fit your situation. With that out of the way, let us get into it. Here's the framework I want you to keep in mind as we move through these 5 names today. Massive returns happen when a company has the right product in a fast-growing market before that market becomes obvious to everyone else. NVIDIA was not a household name in 2020. Palantir was being dismissed by most of Wall Street as recently as 2022. The investors who captured those minds were not predicting the future. They were paying attention to the present. They saw demand building. They saw the technology maturing, and they put real capital to work while everyone else was still arguing about whether any of it would even matter. That is exactly the setup right now across 5 different corners of the market: AI infrastructure, big tech, quantum security, and the energy that powers all of it. These are not random tickers. Each one of them sits at a critical choke point in a trend that has years of growth ahead of it. Let us get into the names. The first stock is ASML, and this is one of the most fascinating businesses in the entire technology supply chain. Almost nobody outside of serious investors knows what they do. ASML builds the machines that are used to manufacture modern chips, specifically the high-performance chips that power AI. And the way they do it is genuinely extraordinary. They do not place wires onto a circuit board anymore. Instead, they use a process called lithography, which essentially means writing with light. Their machines use a specialized laser to shine onto a silicon wafer and etch the chip design directly into it. These machines are extraordinarily difficult to build, so difficult in fact that ASML has effectively no real competition at the cutting edge of this market. And here's the part that matters most for investors. One of their biggest customers is Taiwan Semiconductor, the world's largest chip manufacturer, which produces chips for NVIDIA, AMD, and pretty much every major AI company you can name. That means the entire AI boom you have been watching unfold over the last 2 years, the boom that pushed NVIDIA past a multi-trillion-dollar valuation, could not exist without ASML's machines sitting at the start of the supply chain. They are not in the headlines, but they are absolutely in the critical path. And the financial picture underneath this company tells you everything you need to know about the strength of the position they have built. ASML's stock price is up over 100% since the start of 2025. Revenue has been growing consistently year after year. Gross profits are climbing alongside it. This is not a story stock living on a promise of future earnings. This is a company already collecting real revenue from the most important customers in the entire chip industry. If you are looking for a true picks and shovels play in the AI market, this is the company selling the tools that everyone else has to buy. ASML is a long-term hold. We are talking 5 to 10 years minimum to fully play out. But that is exactly the kind of horizon where these positions tend to compound into life-changing returns. The second stock is Celestica, and this one is in a completely different category. High growth, real momentum, and a stock price that has already been moving in a serious way. Celestica is up over 3,000% from where it was a few years ago. 3,000%. And I know what you are thinking. After a run like that, is there really still room? The answer, based on what this company is actually doing, looks like yes. Let me explain why. The CEO of Celestica describes the business as designing and manufacturing the infrastructure that enables artificial intelligence. They focus on three areas: storage, compute, and networking for AI data centers. Here's the way I want you to think about it. If the GPS from NVIDIA are the neurons in the brain of an AI system, Celestica builds the rest of the brain matter, the connective tissue. You cannot run AI without the rest of the data center, and Celestica builds exactly that. Now, there are other companies in this space. So what makes Celestica different? Two things. First, execution. Their profits have grown extraordinarily quickly alongside their revenue, which tells you they are not just capturing market share, they are doing it efficiently and profitably. Second, the catalysts in front of them are real. AI tech spending is expected to reach $700 billion this year. That is real money, going to real companies that build real infrastructure. And Celestica recently announced a partnership with AMD on their new Helios Rack AI platform, a product that pairs AMD's computing with Celestica's leading-edge networking technology. We are getting to the point where the bottleneck in AI is not the chips themselves. It is how quickly and consistently you can deploy and connect all that hardware inside a working data center. Celestica is solving exactly that bottleneck. This is a stock for investors who believe the AI build-out is real and continuing. If you do, the growth thesis here is one of the strongest on this list. The third stock is Microsoft. And I know Microsoft is not exactly a hidden gem. It is a $3 trillion company. But here is what most investors are missing right now. There is a real argument that Microsoft is one of the cheapest big tech stocks in the entire market. Microsoft stock has had a rough year by its own standards. It rose as much as 38% at one point, then gave most of it back, and is finishing the year only around 11% higher. There has been a lot of noise, concerns about overinvestment in AI, complaints about user-facing products, leadership shakeups inside their AI division. And anytime there is this much emotion around a company, it creates an opportunity for the investors who can look past the noise. Here is what the noise is hiding. The real growth story at Microsoft is not in their consumer products. It is in their B2B business, specifically Microsoft Azure, their cloud platform. Azure and the cloud services around it grew revenue 39% year over year. 39%. From a company that already generates over $200 billion in annual gross profit. To put that in perspective, their entire personal computing division is a $14 billion business. The cloud is where the value is being created, and here is where the valuation argument becomes genuinely compelling. Microsoft's price-to-earnings ratio is sitting at around 26.5. Compare that to its big tech peers. Google is trading at 31, Apple is at 34. Even Meta, the cheapest of its direct competitors, is at 28. If Microsoft's valuation simply caught up to Google's, not exceeded it, just matched it, that alone would represent roughly a 17% upside in the stock from where it is right now. That is short term. The long-term thesis is even stronger. Microsoft Azure continues to grow. The company is now properly investing in next-generation generative AI models rather than just bolting AI features onto existing products. And they are quietly building genuinely impressive technology in the quantum computing space with their Piranha 1 chip. When a $3 trillion company is trading at a discount to every other major name in big tech, you have to at least have the conversation. The fourth stock is Cloudflare. And in my view, this is one of the most innovative companies on the planet right now. And it sits in front of two completely separate generational trends at the same time. Cloudflare's core business is protecting websites and the broader internet infrastructure from threats. They run a meaningful chunk of the internet's backbone. But what makes this stock genuinely interesting is what they are building for what comes next. There is a concept called Q-Day. It is the day quantum computers become powerful enough to break the public key cryptography that secures virtually everything on the internet today. Banking, messaging, encrypted communications, all of it. Google has expressed concern that Q-Day could arrive as early as 2030. IBM expects some quantum attacks against high-value targets to start as early as 2029. Cloudflare has already been moving on this for years. Every website running on Cloudflare has been resistant to quantum hacks since 2022. 65% of their human web traffic is already quantum encrypted. They are targeting full post-quantum security by 2029. That is not a company reacting to a threat. That is a company that has been quietly positioning itself for years to be the default infrastructure when this transition becomes mandatory across the entire internet. But the quantum security story is only half the reason this company is so interesting right now. Cloudflare recently expanded what they call their agent cloud, infrastructure designed to power the next generation of AI agents. The CEO put it best on their last earnings call. The shift toward AI and agents is, in his words, a fundamental replatforming of the internet itself, and it is driving demand across all of their services. Think about it this way. If you imagine an AI agent as a brand new kind of web user, Cloudflare does not care whether the user is a human or an AI. They get paid either way, and the numbers reflect that. Q4 revenue hit $614 million, up 34% year over year. Revenue is growing exponentially. Gross profits are growing even faster, and their net losses are shrinking every year, meaning real GAAP profitability is genuinely within sight. Once that happens, it opens the door to potential S&P 500 inclusion, which historically tends to provide a meaningful boost. This is a company that is not waiting for the future. It is building it. The fifth and final stock is the one I have personally been buying the most of in the past month, and it sits in the corner of the market that almost nobody is connecting to the AI story. It is in the energy sector. The company is Constellation Energy. Here is the part of the AI build-out almost nobody is talking about. All of this, every data center, every GPU, every AI model runs on electricity, enormous amounts of it. Data centers are projected to consume more than 10% of all U.S. electricity by 2030. And the big technology companies are not just buying any electricity. They are demanding clean, reliable, carbon-free power at a scale that almost no other industry has needed before. Some serious analysts are now arguing that the biggest single winner of the AI boom might not even be a technology company. It might be an energy company. And Constellation Energy is the largest producer of carbon-free energy in the United States. And the deals being signed right now tell you exactly how seriously the biggest companies in the world are taking this. Last year, Constellation signed a 20-year deal with Meta for clean nuclear energy in Illinois. Microsoft signed a contract with them to reactivate 3 Mile Island, and they are paying a premium for that power. A premium. That is not theoretical demand. That is the largest technology companies on Earth committing to multi-decade contracts at premium prices, because nuclear is the only realistic way to produce the volume of clean energy AI requires. And here is where it gets really interesting from an investor perspective. There is a disconnect in this market between what most people believe about nuclear power and what the data actually shows. After incidents like 3 Mile Island and Chernobyl, public sentiment turned heavily against nuclear, and the entire industry stalled for decades. But when you look at the actual data, nuclear power is the second safest form of electricity generation behind only solar, orders of magnitude safer than natural gas, oil, or coal. The market is pricing in the old fear. The reality has moved on. That is precisely the kind of disconnect that creates real returns. On top of all of that, Constellation recently acquired Calpine, one of the largest natural gas operators in the country. That gives them an enormous short-term cash flow engine to power data centers right now, while they spin up nuclear capacity over the longer term. Short-term revenue plus long-term dominance. That is exactly the setup I want to be positioned in. Let me pull this all together because I think the bigger picture matters more than any individual ticker. 5 stocks. 5 completely different corners of the same massive trend. ASML builds the machines that make the chips. Celestica builds the data center infrastructure those chips need to run. Microsoft sells the cloud platform that runs on top of it. Cloudflare secures the internet that all of it depends on, both today and after Q-Day arrives. And Constellation Energy generates the clean electricity that makes any of it possible at all. That is the entire stack, from silicon to software to security to the power grid itself. And every one of these companies is sitting in front of a wave that is already in motion and clearly accelerating. AI capital expenditure is reaching $700 billion this year. The agentic AI replatforming of the internet is happening right now. The quantum security transition is being prepared in real time, and the energy demand to power all of it is producing 20-year contracts at premium prices from the largest companies on Earth. None of this is speculation. These are real businesses with real revenue, real growth, and real positioning. The investors who will look back on this period the way today's investors look back on early NVIDIA or early Palantir are the ones doing this homework right now, not the ones waiting until the headlines tell them what already happened. If you want to keep getting this level of analysis on the stocks and trends that actually matter, hit that subscribe button right now and turn on notifications so you do not miss a single video. And speaking of what matters, we have been talking about the companies powering the AI build-out today. But there is one specific sector connected to all of this that I think might be the most undervalued opportunity in the entire market right now, and almost nobody is covering it properly. That is coming in the next video. Subscribe, and I will see you there.